Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Marex, Director of Index Research and Development at Nasdaq Investment Intelligence, to discuss tech exposure in the Nasdaq-100 and what's driving year-to-date returns. Mark, it's great to see you as always. Welcome back to Trade Talks. And what's interesting about the index we'll be taking a look at today, it only has tech exposure in it.
Yeah, Jill, thanks for having me. And figured it's a good time to talk about the Nasdaq-100 Tech Index. There's two versions of it, an equal weight, ticker NDXT, and then this market cap weighted version, NDXTMC. And the reason it's interesting to talk about right now is it's actually been disproportionately tech as a sector driving the performance of the broader Nasdaq-100 this year. On this first chart, you can see year to date, NDXTMC is up almost 28% as of yesterday's close versus only 19% for the Nasdaq-100. I mean, 19% not too shabby, but if you break down sort of the return attribution, contribution by sector year to date, tech is representing about 77% of the gains year to date, even though the weighting is only about 57%. A lot of people hear Nasdaq-100, they may think, oh, it's a tech index. It's actually usually around 50 to 60% kind of pure tech exposure, right? So interesting to see that strength this year. And then, you know, on the longer time horizon, you can see these indexes do track each other pretty closely, but are subject to these kind of periods where, you know, maybe tech is outperforming versus underperforming year to date. That's one of the things we're seeing.
If we take a look at the composition of NDX TMC and the regular Nasdaq-100 NDX, what does the composition look like? Where does it differ?
Yeah, so we'll start out by looking at sort of just the biggest names, right, in both of the indexes. So on the left-hand side, you see the top 20 of the Nasdaq-100. They make about 69% of the index weight. I've kind of boxed the names in the top 20 that don't belong to the tech sector. At least based on ICB classification, which is what we use here at NASDAQ. So, you know, names like Amazon and Tesla, a lot of people might think, hey, they're tech, they're in the NASDAQ-100. They're actually technically consumer discretionary names, same with Netflix. And then you've got other names that, you know, maybe people don't think of as a typical NASDAQ-100 name like Pepsi, Costco, Honeywell, or Amgen, but those are big names. They're outside of the tech sector, outside of consumer discretionary. And still, you know, well, not Costco, but still big members of the index. If you look on the right-hand side, NDXTMC taking only the 37 constituents that are tech classified as a sector, more concentrated here, right? About 88% of your index weight comes from those top 20 names. And recently, you know, given what we've seen year to date, NVIDIA has been at the top of that list because it's been pretty much the biggest single driver of outperformance in the entire Nasdaq-100, up close to 100% year to date. Meta Platforms also having a really, really good recovery this year after underperforming last year. So that's how it kind of shapes out from the top 20 vantage point.
And if we take a little bit deeper of a dive and look at the constituent analysis, where do you see overlap?
Yeah, so, you know, the 37 constituents, 36 companies technically, because Google's got two different share classes, right? So this lays it out for you visually, looking at the NDX TMC, the tech sector portion of the Nasdaq-100, ranked in green from biggest holdings all the way down to the smallest from left to right. So technically, this index has a capping system. No security is supposed to be more than 10% of the weight. That's at every rebalance and reconstitution. But as I mentioned, NVIDIA, just because it's been on such a tear, it's jumped up quite a bit over 10% recently, just over 12%. And then you've got Microsoft and Apple sort of capped out at 10 there, Meta close to 10. The biggest overweights here, they're not all on the left-hand side of the graph, right? NVIDIA is a big overweight, 12 versus only 5 in the NDX. Meta is a big overweight, 9.5-ish versus 3.5. Broadcom, Google, a decent overweight too. But as I mentioned, because of that 10% cap, Microsoft and Apple, those are actually underweights for NDX TMC. Nasdaq 100 has a slightly different capping system where those weights can go up a bit higher. So again, depending on where you are in between rebalances and reconstitutions, you might see some noise here, but generally speaking, you will see, bigger weights to all the names here because there's only 36, 37 of them versus 100 in the Nasdaq 100, and we're weighting by market cap. So interesting way to play, the Nasdaq 100 this year if you are really focused on tech recovering from the underperformance last year. Just one of many spin-offs that we have of the Nasdaq 100 that gives investors kind of a different, more concentrated flavor of how to play this universe.
All right, Mark, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.